Hi, my name is Sunil Joseph. My metric number 824-3610. Our group conducted a comparative analysis between QL Resources Berhad and Dutch Lady Mill Industry Berhad based on their annual reports for the financial year 2023 and 2024. The main objective of this assignment is to examine how both companies apply selected accounting standards, namely IAS 16, IAS 38, IFRS 9, IFRS 16, and IAS 37 in preparing their financial statement. By comparing the annual reports, we can identify changes in accounting policies, disclosure, asset measurements, and recognition practices between 2023 and 2024.
Hi, my name is Ryan Hidayah, metric number A2483606. This slide presents a comparison between two major companies, QL Resources Berhad and Dutch Lady Mill Industries, which represent two different business strategies. First, QL Resources Berhad adopt a strategy of continuous diversification. The company expands across multiple business segments, including integrated livestock farming, marine product manufacturing, palm oil, and clean energy, as well as convenience stores through our family mart. Due to its diversified operation, the accounting expectation include high exposure to right-of-use asset, financial instrument, and various provision. On the other hand, Dutch Lady Mill Industry focused on strategy transformation. In 2024, the company completed its strategic relocation from the old Petaling Jaya plant to the modern Bandar Intex manufacturing facilities. This transformation significantly impact its accounting, especially in terms increased property, plant and equipment, reduced legacy list, and restructuring provision. In the conclusion, both companies demonstrate how different business strategy can lead to different accounting impact and financial reporting outcomes.
For the financial trajectory, both companies show positive growth in 2024. Starting with QL Resources Berhad, revenue increased from 6.24 billion ringgit in 2023 to 6.65 billion ringgit in 2024, while profit before tax rose from 480.8 million ringgit to 626.5 million ringgit. Total asset and total equity also increased, indicating stronger business performance and expansion. For Dutch Lady Mill Industry Berhad, revenue increased slightly from 1.44 billion to 1.45 billion ringgit, while profit before tax increased from 69.5 million ringgit to 125 million ringgit. Total assets also grew from 946.5 million ringgit to 1.07 billion ringgit, mainly due to higher investment in property, plant and equipment. Overall, both companies recorded stronger financial performance in 2024. However, QL Resources demonstrated larger growth due to its diversified business operation, while Dutch Lady's improvement was largely driven by the completion of its Bandar and Stack manufacturing facilities. Thank you.
Assalamualaikum and good day everyone. This section discusses the application of IFRS 16 Property Plant and Equipment by QL Resource Berhad and Dutch Lady Mill Industry Berhad. Both companies recognize PPE because their operation depend heavily on physical assets such as land, building, machinery, vehicle and equipment. In terms of carrying amount, QL Resources reported an increase in PPE from 2.2 billion in 2023 to 2.34 billion in 2024, while Dutch Lady increased from 503 0.2 million to 620.1 million. This indicates continued investment in operational asset and expansion project. Both companies apply the straight line depreciation method and use the cost model, meaning assets are measured at cost less accumulated depreciation and impairment loss. Neither company adopted the revaluation model. For addition, QL Resources increased its PPE investment to 329.6 million in 2024, reflect ongoing business expansion. Meanwhile, Dutch Lady record 134 million in addition, mainly related to its strategic transition to the Bandar Estate manufacturing facility. In conclusion, both companies comply with IFRS 16 requirement. QL Resource has a larger and more diversified PPE, while Dutch Lady PPE movement is largely driven by its major facility transformation.
So, good morning everyone. About this slide is discuss the application of the IAS 38, which relate to intangible asset under IAS 38. Intangible assets are identifiable non-monetary assets without physical substance. They are expected to generate future economic benefits. For QL Resources Berhad, the main intangible assets are goodwill, franchise fees, license, contractual production backlog, and other intangible assets lah. So in the contrast, the legitimate industry Berhad mainly recognize computer software and software development work in progress. So in terms of recognition, QL Resources record goodwill at cost, less impairment loss, and conduct annual impairment testing because goodwill has an indefinite useful life. So contrast in Dutch Lady, capitalize software development costs until the software is ready for use. So regarding amortization also, QL Resources report a decrease from RM 2.1 million in 2023 to RM 1.6 million in 2024, and meanwhile Dutch Lady amortization increased significantly from RM 2,700 to RM 1.4 million as more software projects become operational. So overall, both companies comply with IAS 38, but their intangible asset portfolios reflect different business strategy and operational needs. So that's all from me. Thank you.
Bismillahirrahmanirrahim. My name is Haikal Pujangga bin Masri, and my matrix number is 824-835-95. And I will be presenting about IFRS 9 financial instrument, where under IFRS 9, both companies classify most receivable and cash balance at amortized cost, while the derivative instruments are measured at the fair value. So firstly about QL Resource, they has the most complex financial instrument structure with borrowing exceeding 1 billion ringgits, multiple financing resources, and also derivative contracts. But as for Dutch Lady, they introduced borrowings at RM 71.3 million at 2024 to support operational and the capital requirement. This demonstrates a significant difference in financial exposure between the two companies, because in the 2023 there is no borrowing for the Dutch Lady. That's all from me. Thank you.
Looking at expected credit losses, QL's allowance increased from 26.5 million to 31.3 million due to higher receivable balances and broader customer exposure. In contrast, Dutch Lady's allowance decreased dramatically from 2.2 million to 173,000. This reduction was mainly driven by write-off and tighter credit management after the operational transition. Overall, QL faces broader credit risk, while Dutch Lady demonstrates stronger customer credit control. IFRS 16 highlights a clear difference in operating strategy. QL Resources increased its right-of-use assets from 520.5 million to 527.4 million and lease liabilities from 210.8 million to 225.8 million. This is because the group continues expanding through leased retail stores, warehouses, offices, and operational facilities. In contrast, Dutch Lady's right-of-use asset decreased from 8.5 million to 3.8 million, and lease liabilities decreased from 11 million to 4 million. The reduction was mainly caused by the expiry and the recognition of leases associated with the former Petaling Jaya facility. Therefore, QL shows an expanding lease network, while Dutch Lady shows a consolidating operational footprint after completing its transformation strategy.
First, the QR resources demonstrate ongoing operation obligation, their warranty privacy, skill and skill as design certificate, and for RM 3.1 million to the 12.8 million. We employee benefit obligation in Indonesia increased to 16.3 million. Then the effect the incompatibility that the director to the Gorovin say valued and work for size. Let's in contrast, steady hike the strategy settlement following the discontinuation. They have mid-power the operation. The provision dropped actually from 12.8 million to the RM the 1.9 million, which the 8.9 million with it then 2.4 million. This is the reservation, the effective equity, the reducement aspect in the 2025.
Assalamualaikum and salam sejahtera. My name is Muhammad Amitaki bin Muhammad Ibrani and my matric number is 82483594. Today I want to represent the disclosure digest metric. This metric shows the difference in disclosures between both companies. QL Resource is more comprehensive and continuous because it reports across many business segments consistently. In contrast, the LMI is because focus and event-driven with disclosure mainly explaining the financial impact of the BADA as the transition. Okay, I will continue to conclusion. In conclusion, both QL Resource and the LMI show strong compliance with IFRS and MFRS standards and improved transparency in 2024. However, QL Resource stands out in disclosure breadth by managing more complex and wide-ranging financial reporting. Meanwhile, the LMI excels in narrative transparency by clearly explaining the financial impact of its factory transition. Overall, accounting disclosure helps companies communicate their business realities more effectively.